Hello, everyone. Let's have a great week. How's everyone doing today? Hi, Glenn. Who else is in the house? How about this for we'll call it a tagline or something. Hello, Abel Lopez. How are you? Long time. Ben. Got a lot of people I know. Oh, Carlo. How are you? Charlie. Everyone. See a lot of names I've known for a while. What a big, small family the FX trading community is. How about this for today's July 1st? Let's fly in July. What do you think? Everyone ready to put their wings on? Umair, Charlie, hello. All right, so last week I was talking about looking for a recovery in US dollar yen, especially after we got back within the wedge line, just grinded higher to resistance, and we have this gap higher today. So I really want to focus on this just in case. I know a lot of you guys know this, but US dollar yen and gold are married up pretty good. Look at this, 1-2 right here. See that? Now look at gold. One, two, maybe one more. Last week I talked about the potential that we would get back to the major breakout. Close enough for government work. I have the breakout at 75. Okay, so maybe one more shot down. While I'm on the metals, I really have to point out this, that gold the last couple days has really gotten hammered, whereas silver is holding up like a champion. We've had a couple of false breakdowns under this 15-17 level, no follow through. Back above it, maybe we're going to attack this upper line. If we get through this upper line here in silver, we could get back to the wedge target. So for turnaround Tuesday, I'm looking for buys in the metals, and actually the silver looks a little better to me, and you don't have to take my word for it. Look at the ratio. Also took profits on yen last night, considered it a gift. It's my philosophy, it's not always right, but when news goes your way big with gaps your way, I consider it a gift, and I accept gifts. So here's your gold silver ratio. The last couple of days, we did have a confirmed high on the daily, so maybe it's not over, but we do have some divergences developing here. Come on, RSI. Okay, the 1 hour.
I was going to say, double click your chart and an RSI probably pop up.
All right, thank you, buddy.
Yep.
So anyway, pretty big fall in a couple of days. So is it the top? My strategy was, it really didn't involve leverage. Steve likes to do it using leverage, but I know a lot of people out there hold physical. And what this is saying is that it's possible gold is way overvalued compared to silver, and now we have it pulling back and not that much more expensive as it was. So, you can take a look at some of these long-term looks. I mean, let's go to a monthly. I'm slow today. I mean, my laptop is. I am too. I don't know why it's hesitating. Let me go to a weekly. Okay, as you can see, just in 2016, we were at 64. So this has been a very long climb. And I still think it's a good idea. You don't do it all at once, but, just like you scale into a leveraged FX trade, nothing wrong with taking a little of your gold and selling it and converting it to silver here. I think that long term on this ratio, we might be looking back in 6 months and saying, God, what, the ratio was in the 90s. Why didn't I do anything? So still think that eventually we could revert to the mean. And, I've been around long enough to remember the gold silver ratio, a norm for it was 40. So that means it could be cut in half. So I wanted to show that. I also think this should be the week in bonds. If they're going to correct, we should start soon. So I look at this 10-year here. Okay, here's your weekly. It's not going to take much to have a 2-week reversal. We just need yields back over 206.30, and we're at 202, so it's 4 bips. And here's the shorter term look of it. So we're still holding. Here's your first higher low. Here's your second higher low. Is this your third higher low? And we get through this 207 from 198 is going to give you 215, 216. That's what I'm looking for. 216, 217, at least for this wave. So we'll see if the bonds come off a little bit on this. And it's Blake, Stell, and me today, you guys. Euro. I want to save some things for, I know Blake likes to talk about the majors, but I think we got probably to Blake's lower range support box that he was showing all last week. And we start getting through 1320. I think you could see 1250, 1260, maybe even 1240. And last week I talked about the dollar bouncing. This was a turnaround Tuesday play, and I don't think it's over. Okay, I think we could get to 96.80. Steve showed it. Okay, 90. I think he said 660, 680, maybe even 97. We broke 200 right here, 200 points from the recent high at 780-ish or 78. Halfway back would take us there, right about here. So I think some things are setting up for turnaround Tuesday in the Dixie, and just want to show this yen again, and I'll give you kind of an Oster Pinkert. Okay, so I know a lot of people are bearish US dollar yen, and they're looking for 92 longer term. But I believe as long as last week's low holds, and it looks like we should have a weekly reversal, unless the yen gives it all back, it's just closing back over 107.30. I do think that we're going to make our way back towards 109 is where Steve showed a breakdown. And then I have convergence of these moving averages, which would fill the gap that we left on the way down. But actually, when you look at it, here's your low. Here's your first higher low, here's your second higher low, and this could be your third higher low if last week's low holds. And this could really turn bullish. I have some targets based upon this move or this move and some intersecting lines that could take the yen up to 120. So I think that's a contrarian position right now. A lot of people, because of bonds and its relationship to the bonds. And if this is going to happen, I don't think long term it spells a bullish environment for gold, right, guys? I mean, it's something that there's an echo still. Okay. Anyway, I think that if this scenario and narrative unfolds, I don't think it's going to be a friendly climate for precious metals. So really, the gold is really facing a very important test. We'll see how it does this week. Silver acting better. We're already starting to get a little bit of a bounce here. But I think I'll attempt it down here. One more shot down. And actually, instead of buying gold, I may go with silver because it acts better, and I'll have most likely a higher low. If gold trades 1380 or so, and all silver does is pull back to 1517, this is going to be my preferred long based upon what I see happening and developing in the gold-silver ratio. So I want to welcome everyone to our holiday week, 4th of July week. I believe we are closed Thursday. Believe we're not sure, Blake. We're opening face on Friday, right?
Well, I think face should be open on Friday.
Okay.
It just may be a little slow.
Yeah.
I think you probably will have a short, uh,
Abbreviated session.
yeah, a very short session, if anything, because it's so many people are out. It's 4th of July.
It's weird on a Thursday, huh?
Yeah. It kind of acts like Thanksgiving. Thanksgiving in the U.S. falls on a Thursday, and then Friday no one's around. It's half day or whatever. It's going to be a very similar type of situation where the market's going to be extremely slow on Friday. There's so many people out. Many guys from my office are gone.
They're at their mansion in the Hamptons.
No, everybody's on vacation or doing family stuff. I'm actually leaving out of town tomorrow morning, so I'll be gone for the holiday week as well. That's what most people are doing for this year, since 4th of July is landing on a Thursday. Most people are out for the week, so it's going to be it's going to be a fairly slow day. But keep in mind, Friday is also non-farm payroll.
Oh, so, wow. Okay, in thin market conditions.
Yeah, it's going to be a non-farm payroll in very thin market conditions is correct. So, the chances of some, wild moves on Friday, I would think, are pretty high. So,
especially with you being out of town.
Yeah, with me being out of town, that's definitely a nail in the coffin.
So we have to make
volatility.
Yeah, we have to make hay between today and Wednesday.
Yeah, pretty much.
Okay,
First of all, I want to take a little bit of time and talk about equities. Equities are at all-time highs. Look at the S&P today. We are at all-time highs. We got a truce between China and the U.S., so the market is obviously cheering that. This is not what I was looking for. It was to an extent of I was looking for the S&Ps to hit new highs, but I was really hoping we'd hit new highs on a trade deal. But instead, we got a trade truce. This is an ongoing trade war that is just in a temporary pause. Now, the fact of the matter is that the stock market is cheering it, and to me, it looks like, as I explained on the week ahead video, that we are going to extend these gains probably to 3,000, maybe even to 30, which is 127% extension of this entire, move lower here. We should probably go a little bit higher. For those of you that are sitting here going, well, I'm just looking to, I'm looking to short the, stock market. You got to be careful, because I was in the camp that I would actually short the stock market on an announcement of the trade war coming to an end. This is not the end. This is just a pause, will the stock market fail up here? We'll have to see. How things develop. I think from here, and I'm just thinking ahead. So let me just pretend I know what's going to happen for the next 2 weeks, which I don't. But let's just say I do. Okay, let's just, for argument's sake, let's just say that I'm correct here. What I think is going to happen, and let me grab a pen, draw pen. There we go. Okay, so what I think is going to happen is we're going to rally, and then what I'd like to see is if we come back down in the next week and we fail back below the breakout point, that would be my trigger that risk off is coming. So we'd have to let me delete that. I'm going to be a little bit more clear all drawings. Let me do where is the color? I want to do a blue. Yeah, let's do, okay. So let's say stocks rally from here. We rally a little bit, And what I would be looking for over the next week or two is if we come back down and fail. And then if we fail, that would trigger, I think some selling in the stock market. I'd like to see how stocks respond up in these, this nosebleed, what I feel is like nosebleed territory. I'd like to see how it responds versus, we had a spike up and then, everybody cheers the stock, the trade wars ended. Then I would have been short, but I don't think that's necessarily the case. I want to just see how things continue from here. So again, for those of you that are just itching to short stocks, which believe it or not, I am. I'm like, okay, let's let them rally a little bit, and then I'd look for a good area to be on the short side. I'm not doing that this week. First of all, A, it's I'm going to be traveling, but B, it's not the event that I was looking for to sell equities. I wanted to sell equities into a big gap higher that the trade war has ended and yada, 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 but that we just didn't get it. So, so stocks here are at highs. I want to see how they act at 3,000 on the S&P, maybe a little higher towards 30 and a quarter. Now, what that also means is, can we move higher in these yen pairs? Dale, you were just talking about the yen, and the dollar yen is testing pretty key. This is a previous. Let me just show you what the dollar yen. This is previous support at 108.50. We're right back at that. We tested 108.50, and we're just underneath it right now. Remember, we've completed 2 flag patterns. For all intents and purposes, this is a one big flag pattern here, the secondary flag pattern here, and you can argue and say, well, Blake, we didn't quite complete this one here. We could have gone a little bit further, but when you're within about 15, 20 pips of a pretty big move, I look at that as being complete. Now RSI is pointed higher. Looks like this resistance is going to give way. And if stocks continue higher, I'm assuming we're going to go past 108.50 and maybe even travel back up towards 110. So I think that's entirely possible. And to echo what Dale said is that if the yen continues lower, typically that's not a very good sign for gold. Now, I did pick up some gold last night, and I bought some on this dip. And it's because I even told you guys on the week ahead video that I was looking to do so. And I picked up actually silver overnight. I picked up gold. I already spun out of my silver. I made really good gains in silver, and gold I'm just kind of making some gains, nothing too big. But gold, you have to keep in mind where we went to. We went right to the breakout point to 1380. Okay. And can we drop a little bit further? Sure, we could drop all the way to 1360. And I think if stocks continue to climb and we continue to break out, and then the dollar yen goes above 108.50, then gold could pull back all the way to 1360. I think that is possible. But we came out of this triangle. We're talking about gold here. We came out of this triangle. We hit 161% extension of this move. You can see it right here. 161% extension of that move. This was a 618 retracement of this entire move. You can see that entire move here.
A lot of confluence.
Yeah, so we got a lot of confluence there, and that held gold overnight. We even dipped to a fresh low. You can see how we dipped to a fresh low. Here's a spike following the open, and I actually picked up gold like right on the open. Actually, I put in a pattern in play too. Picked up gold right at the open. We hit brief new lows, and then here we are grinding higher again.
What made you buy silver too, Blake?
Silver. If you look at silver dipped right to this pretty key support. And this was in my view at that time when I picked it up right here, it was a false breakdown. So I bought silver here, right at the gap. When it gapped down, and then I spun out of it like here. So I made really good money on silver. I didn't hold it though, because I figured, well, I'm long gold. I don't want to keep both. And silver was so quick in profits that I spun out of it. Oh, I'm sorry. Yeah, that was it. So this is right at the open here.
First bounce.
Yeah, first bounce here. So I didn't pick it up in European trade, which, obviously in retrospect, I probably should have.
You're asleep.
But still, it was just looked like a false breakdown at the time. And I knew that
a lot better than gold last couple.
Yeah, it does act better than gold. So when I picked up gold here, I just held on to it and I put my stops in a little deeper than where we went. So, I'm fine with it. And what I'm a little irritated about is that I did, and you'd mentioned on the euro, I actually own euros here. My pattern in play originally from over here when I went long, coming through the 200-day moving average, I put my stop a little too close. You can see the close patterns in play. I had my stop at 113.19 in the invalidation point. I actually had my physical stop below 113, so I didn't get triggered in my physical stop. But I've been in and out of the euro since that pattern in play like 4 different times, playing it on the long side. I just kept buying it last week as we dipped down to 113.50, and I'd sell it as we got to 113.70, 75, that type of thing. I was just scalping in and out. On the patterns in play, let me explain to you guys these patterns in play that you see here. These patterns in play, they are the way you should interpret them. If I were you at home, is these are a bias. It's telling you like what our overall bias is in the market. We have to put in invalidation points based on what we see from a by the book standpoint. But like I may have a pattern in play in the, let's say, euro, for example, on the long side, but I've traded it on the long side since that pattern in play came out 4 or 5 different times over the last week. And then I bought it again. I bought it again overnight on this dip. And so, I don't readjust the stops because, one of the things as a trader is you don't want to adjust your stops because then you end up, being a, like, you don't want to, adjust their stops. So, because that's a bad habit that some traders get into. They're like, oh, I was in this trade, I'm going to adjust the stop and then I'm going to give it a little looser stop. And I only adjust the stops with my trade as long as they've got that momentum continuing higher. I might actually put in another.
I say,
huh?
I say the last time I used a mental stop, my first stop was a mental institution.
You're full of the best sayings, Dale. I'll tell you. But
they relieved me though, bro.
I like so like for me, I don't like to put in the quote unquote the mental stops because yes, it will. Not a lot of people are diligent enough to respect them or disciplined enough. So. On my trade that I took last night, I didn't want to put my stop so close. I put it below 113, and I still believe if the euro is trading above 113, it's still a pretty bullish event. I mean, we may close back above the 200-day moving average, which comes in around 113.47 right now, or 40. Actually, it looks like it comes in around 41, 42. I feel that the euro probably still close above there, and we are still developing like a flag pattern. You can see this is still a bull flag pattern. As long as these lows hold, the euro still looks constructive. Now, you might have asked, because I did, why did the euro come off overnight? And I think what this was is a stop loss run because when the PMIs came out, which were weaker, by the way, out of Europe, we were already trading down in the 30s. So this is like a 1 o'clock in the morning, European time or East Coast time. So like 10 o'clock my time, So I was already in bed, but it looks like it just trips stops. We consolidated inverted head and shoulder pattern, completed an inverted head and shoulder pattern this morning, and now we're just kind of consolidating. It looks like it flushed out some stops of some late longs, and now it still is, in my opinion, pretty constructive here. So one of the things, as you see equities continue higher, and equities are still holding on to gains. You look at the NASDAQ, the NASDAQ here, we're near our highs of the session, and NASDAQ looks like we're going to try to break out into new highs. As we are continuing with this strength, chances of US dollar continued weakness and yen weakness is, I think, high. That means that not only the US dollar Japanese yen can bounce, but you can see the euro yen continuing to be constructive. The pound yen might get a little bit of a recovery here. The Aussie yen, New Zealand yen, those are still building some pretty bullish bases, divergent on a new trend low. Same with the Kiwi yen, divergent on a new trend low. These still look pretty constructive. So I wouldn't be surprised to see continued dollar weakness. And here's your dollar index, respecting the 200-day moving average. Continued dollar weakness, and also yen weakness as well. That means that the yen pairs will continue higher, more than likely. That's what I would say, as long as stocks are stronger. And actually, the cable just got a nice little goose here. I'm not sure if there was anything that specifically that got the pound moving, but the pound just rallied off of these lows. The cable, if you've been reading the analysis since last week, for the pound on the ForexAnalytix site, obviously we've been looking at this 127.70 as being really key resistance. But what I was looking for is, I was expecting a move down to 126. Now we went as low as 126.34 today, but what I'm thinking here is that we might actually be developing an inverted head and shoulder pattern. So I think you still have to watch the 127.70, and that's the 127.70 is really key here in the cable. I don't think we're going to break it today, but it's one of those things that if the dollar continues to stay weak, we might eventually get this, this breakout to the upside. So, for those of you that are trading the cable, which I'm not right now, I think that you've got to, keep your eye on them, because this one is one of those that might actually sneak up on you when you're not looking. So the Aussie, the Aussie's right up, against some resistance here. We failed on these highs, and this was pretty surprising to me last night. I was actually looking at the Aussie here at this 72 or 70.25 level. We gapped up to the 30, and then we came off and broke back below 70 cents, and I was like, that's strange. And the Aussie has really failed to extend any upside gains. But I think with equities continuing to stay strong here, the risk might be that we continue higher, or we bounce in the Aussie and eventually, make it back above 70 cents and maybe even higher. Now, one of the things that I do want to point out here, and then I'm gonna bring in Stelios for a few minutes, is that if you look at the data today, we still have ISM. This is the ISM manufacturing data that comes out in about an hour and a half. That's going to be pretty key. We do have ISM services data coming in on Wednesday, which, Steve and Stelios, well, actually, they'll be here in the morning to cover for you guys the ADP number that comes out. The ISM, the guys will be in the chat room for that. And then we have our 4th of July holiday, and then, our employment data on Friday. So still a lot of data to come this week. So, before you get too bullish or too bearish the dollar, keep in mind that we have a lot of pretty key data coming out over the course of the next, next couple of days that could very much influence the dollar ahead of non-farm payroll. You know, a lot of people are looking for those the ISM data to, you know, see if it's going to start showing some signs of deterioration as we're witnessing more of a global slowdown, even though the U.S. has been, you know, quite a bit shielded from all of this. You know, to see if the data actually starts to slow down a little bit here in the U.S. and this week might be that week where we start to see it. It probably is going to happen because so many traders are away from their desks this week. So many big traders are not around. So I want to bring in Stelios really quick and see what his thoughts are overnight. I am going to stick around. Steve is not in today. He will be in tomorrow and on Wednesday. But he's off handling some personal matters today. So I'm going to be here. Paulie's going to come in, who does the European crossover and also the wrap up. He's going to come in about 15 minutes and give you his take on what he saw in European trade. He probably has a better idea of what happened while I was sleeping with that, you know, push down in the euro. I know he got long at some better prices down near the lows. So Stelios, good morning.
Good morning. How are you?
Good. I could have slept probably another 2 hours today. It was one of those mornings that I actually, my phone, my alarm woke me up, which is rare. Usually I get up way before my phone goes off. So, yeah, I don't know what happened. I guess it's just, you know, I got used to sleeping in for a couple of days. So, so what's happening with you?
All good here. A couple of things I want to mention in terms of the overnight action.
Yep.
So you mentioned a couple of those, the US-China truce, let's call it. So they're going to delay implementing more tariffs, and they're going to delay the restrictions on Huawei and similar companies. So the thing that I didn't get is what he actually got in return. But anyway, this is what's giving equity markets a nice little lift, and we did write that on the newsletter as well. Because
you know what he got still?
What?
I think Xi arranged for this meeting in the DMZ between Kim and Donald Trump.
Okay. Maybe. I don't know, but yeah.
You know, they jump started it. I read that China hasn't, a president from China hasn't visited North Korea in I don't know how many decades. Okay, and
from the US, you mean?
No, China.
Oh, from China.
China to North Korea.
Oh, China.
So,
to North Korea.
yeah,
Okay.
Xi was there a few weeks ago.
Oh, yes, you're right.
Okay, so I think that's what he got. A photo op, nice photo op, and continued. You know, they're talking.
But yeah, well, Donald Trump is the first sitting American president to cross over to North Korea. So,
well, isn't that an even better photo op?
Yeah, I guess so. But I mean, you don't think there was any, you know, this was but what Stelios is asking, what did the U.S. get out of? What did the U.S. as a country get out of this?
Well, I just told you what I think.
Well, I know, but I'm asking.
It's not fact. It's just, you know, I know that he likes to be the center of attention.
Got it. Okay. Well,
yeah, he got some more exposure. Yeah, maybe. Yeah, it's
good PR.
Okay. So that we'll wait to see what happens on that, because really this is just we put we don't put a full stop, but you know we just wait to see what's going to happen after this temporary truce.
So you know, Stelios, really quick before you continue on, you know, I don't know if you heard what I said earlier. I was expecting, you know, stocks to go higher on, you know, a trade, you know, basically not a truce, but more of a, you know, hey, we've come to an agreement. But stocks are higher this morning, so I am a little skeptical about, you know, fading this rally, because I think the market still has hopium that we can you know, continue to, you know, piece together some sort of trade deal in the future. So here we are.
Fed this month. When's the Fed meeting?
Well, I mean, the Fed's meeting on the 19th. I have to go look at the date. It's like in the next couple of weeks, I think. But I mean, the market's expecting the Fed to cut rates, but I don't know what to do with equities up here, because they're stronger and they're holding on to gains. What do you think here?
Well, we have a saying in Greece which says there is nothing more permanent than the temporary. And basically, I think what happens is the market kind of takes this and prices in a little bit more chance of them finding a permanent deal. Let's say this way. So I think that's what the market's probably doing. They're saying, okay, well, you know, the tariffs are not coming in. Maybe this is the first step towards a deal. You know, it's just, you know what the market's like. They want to find reasons to be positive and to rally. You know, it's been like this for years now. So that's my take on it. But you know what? If nothing comes out of this, and if this proves to be temporary, then we're gonna see. You know, we should see some serious risk off.
How about this? How about it is temporary, and because it's temporary and takes some of the pressure off what markets were worried about, the Fed doesn't have to cut rates in July. And that would be a disappointment for the market.
Oh, that would be a huge disappointment. But I don't believe I don't think that's what they're looking at more the underlying data that's coming in. And I think the Fed
brought up trade as an uncertainty. Powell brought it up.
Yeah,
yeah, well, true.
That is true.
Okay.
I can't argue that point.
Yeah.
All right, Stelio. So
yes.
Continue on.
All right, I'll shut up.
We'll both shut up.
No, this is a very valid point, Dale.
I'm just too jaded, guys. What can I say?
What was I going to say? Oh, yeah. The other thing, obviously, you did talk about this again, is OPEC, and I think they're due to announce today that they're going to extend their production. Basically, they limit the production for another 6 months or so, and Iran is on board, which is pretty big. That's why oil is up 3.5% today. It's still, if you look at the medium-term chart of it, it's still right in the middle of the channel that's been it's been following over the last 4 or 5 years. So it's kind of in no man's land at the moment, but it's very strong today due to that. Now, the other interesting thing, and follow me, there is a pattern here in what I'm going to say. We had PMIs today out of manufacturing PMIs from quite a number of countries, and we had Chinese manufacturing PMI 49.4, a miss on expectations, and below 50, which is a contractionary reading. Spanish 47.9, below 50 and the miss. Switzerland 47.7, below 50 and the miss. Germany 45, well below 50 and the miss. UK 48, well below 50 and a miss. So there is a pattern here, and it's not really looking great. You know, leading indicators have certainly turned in most countries. Even Norway, which was way above 50, came in at 51.9 now and missed expectations. So I'm waiting for the ISM numbers out of the US today, and we are expecting a drop from 52.1 to 51. But I fear it might be even more. So we have to keep an eye on that.
Yeah. So that and that's one of the things that I mentioned a little earlier, Stelios, is that we have a lot of data coming out between now and the time that we get non-farm payrolls on Friday. We got ISM, the manufacturing data that's coming out today. We have services data that's coming out on Wednesday. We have ADP that's coming out on Wednesday. Yes. And then obviously non-farm on Friday. And, I think the risk is that the data starts to look, a little sour. And that, and as I mentioned, and I don't know if you heard me just about 10 minutes ago, is that, I wouldn't be surprised if some of this data starts to miss. And especially that you got so many big traders that are out on holiday this week here in North America. Lack of ability to respond to some weaker data that might actually be coming down the pipe. So
yes, that's a very good point.
And we've gotten a lot of warnings from the Fed chair that they're seeing some cracks in the foundation of the strength in the U.S. economy. So whether it shows up in data this week, it will be seen. But today's data here in the next hour and a half will be pretty key from the manufacturing side. So. Yes,
and remember, only just a little bit more than 6 months ago, it was like a completely different world in terms of the U.S. and both the Fed, their projections, and the way the economy actually had already started turning like what was it going to say? A lot of the leading indicators basically had already started to turn, but really nothing
like
quite
the
like
Philly Fed, Kansas City
Yes.
Fed,
Housing.
Chicago PMIs. Yeah, they started to show a little signs of weakness.
Yes, and housing data had already started to
Yeah,
wane.
and the housing data is. I mean, we're probably going to be picking up a little bit again because rates have dropped dramatically, and we've seen. I mean, you guys have seen the 10-year. I mean, here's your bond market, and you got this big massive rally in bonds, and I personally, had sold a home and bought another home at the end of this year. Well, actually, I closed right here in March. Right as we were making a rally in the bond market, and yields were dropping, and I thought I got some pretty good rates back. And this is back in March, and as you can see, we've got another leg higher in bonds, another drop lower in rates, which in my neck of the woods has really supported home prices.
Yes.
And I'm in an area that housing's pretty volatile, and it's pretty driven by rates, and the market's still pretty firm here because of the low rate environment right now. So
yeah, you can take like a long-term fixed rate mortgages there, right? I remember in the UK when I was, the maximum was 5 years, but you can do much more than that right there, right?
Oh, we do 30-year. Most people will do 30, or you might do a 15, but the majority of Americans will do a 30-year fixed mortgage. So.
You're absolutely right, and there's going to be huge amounts of locking in of low rates, right?
Refis.
And refis, and people are scurrying to take advantage of these lower rates, longer term. Here
I did a 30-year loan on my car.
That's great.
So I kept my payments down. I'll end up paying like $250,000 for it with.
But I hadn't done a car loan in so many years. It's been years and years, and before
they go out to 6 now, Blake.
Yeah, I remember car loans are like 4 or 5 years.
Four forever.
Yeah, and now they do 6-year loans and whatever. But. Interesting. Okay.
Actually, just one more thing to laugh about it. My brother bought a flat in London in 2000, just before the crisis, actually, and he got a mortgage which was linked to the base rate. Excuse me, the base rate of the UK plus 9 basis points. So basically, the base rate, and then they just slashed rates to 0.5%, and he was paying 0.5% for years and years, still only paying 0.75. So he got really lucky on that one.
Wow, that's crazy.
It was a great trade.
So we're gonna bring Paulie in here in just a few minutes. We're gonna let him show everybody what he's looking at this morning when he was talking about the euro. And for those of you that don't know this, Paul Franco, he does our European crossover webinar that is specifically for ForexAnalytix clients. So if you are a ForexAnalytix client, you can listen in during his European crossover webinar. He does actually do a webinar at the very end near the end of the North American session, kind of a wrap up, and gives you a look into the night ahead in Asia. So make sure you listen in for those. But I want to mention really quick, if you like what we're doing here, make sure you visit our webinar sponsor. That's Forest Park FX. If you click on their link on our site, you can be involved in the reimbursement program where you can quite possibly get ForexAnalytix for free if you through your trading. And if you're in North America, you could actually get cashback rebates. And all you have to do is contact them through this Skype or email here. They're a really great organization to work with. We've been working with them for the last years. They've been sponsoring our morning webinars for like the last year and a half. But they're a great organization. I like being associated with them. We've met them at money shows. I've met the principals in person, had lunches with them. We've, every time I go to Florida, just a really great group to be working with. And they're very much in line with, your success, because they just want to see you succeed, because if you succeed, then they'll continue to succeed. And that's same with our company. So make sure you visit Forest Park FX when you get an opportunity. If you're not happy with the broker that you're currently using, or even if you are, if you want to see what other alternatives you have, they will, chat with you and see, if your broker meets the type of trading that you're doing and is giving you the most benefit out of that. All right. Now I want to bring in Paul. But before I do that, are there any questions that have come in, Dale Stelios, that you see?
There is one question
Oil.
about oil. That's about it.
Okay. So what's the question here?
The question is, have you seen oil?
Oh, yeah. I mean, we're above the 200-day moving average. We're actually hitting these highs right here. We've completed that double bottom. So the double bottom did complete. That completed last week. We're coming up to the 618. I think we're coming up to some pretty key resistance. I don't know if I'd be chasing crude up here. I mean, that's personal preference of mine is not to buy it as we're stretching our legs into a 618 retracement. And the question that a lot of people have usually at that point is, well, should I be selling it? It's had a pretty strong move over the last 2 weeks. I think it's one of those situations where it's too strong to be short, but also, it's gone a little too far to be, trying to chase it up here. So if I were to trade crude, which I'm not a very good crude trader, admittedly, I'm just, it's one of those instruments I've stayed away from over the years because I just feel that I'm not very efficient at it. I can make some good calls, but trading it, the one thing is, making a call and trading it is two totally different things. And for me, I'm pretty good at identifying where crude's going to go and what's going to happen with it. I'm just not very good at trading it. Don't ask me why. I think it's maybe the.
Well, I'll ask Adam about the seasonals. Adam Button's going to be.
Oh yeah. Oh, Adam Button from Forex Live is coming on. Yeah. Oh, that's great. What I'd be looking for here is I'd be looking for more of a dip in crude to be on the long side if I was going to trade it, which isn't going to be the case. But that's kind of what I'd be looking for is some sort of setback, below maybe 56 and looking for some longs down there versus trying to chase it up here towards this key, 618 fib. You can see that we're coming up against. Now I wanted to bring in Paul this morning. Paul Franco, you around?
I see he's muted, but I do see him.
Let's see if he is
in attendees.
No, he's here. I just wanted to see if we have to participants. Here we are. Paul Franco. Let's see if we can unmute him. Paul, you here?
Yeah, he's saying he's here.
Okay, I'm here. Can you hear me?
Oh yeah, we can hear you fine now.
Okay, I was unmuted, but y'all had me muted. I mean, because I didn't come on. Yeah, so.
Anyway, well, good morning. How are you?
I'm doing pretty good. How you doing?
Good. Hey, so tell most of the people here, they don't listen to you, here often because you're doing your other webinars, but tell everybody what you cover at the European crossover, because it's always while I'm sleeping. So how does that webinar work?
Yeah, what we do is, and I don't know if you want to switch it to my screen because sure. I'm not the one in control. But what we do is we go in and cover all the majors as well as several of the cross rates, and primarily what we do is we focus in on the short-term as well as scalp trading levels. One of the, I think Blake had mentioned, when we came on air, which we have the webinar every day.
Hey, Paul, wait, I'm sorry, really quick. You have to actually click take over. I don't think I can.
Let me take a look if I can. Hang on.
We're down on the thing. It says new share.
New share. Okay, there we go. Okay.
Click that, and then you should be able to take the screen from here. See if that works.
There, you got it?
There, yeah. Okay.
Okay. But Blake had mentioned that we got long, or I got long in the year. When we came on the air, it was at 1326. We'd already dipped a little bit lower. But one of the things we do is we cover the different for, you can see here, the majors, as well as several of the cross rates. We focus on short-term as well as scalp levels. Now, not everybody scalps. We got a whole plethora of traders in our chat rooms that trade from a short term to a medium term. People like Amanda who trade really across the board. She does very, very well on the cross rates, but she'll hold some of her trades much longer. But a lot of the traders in the chat room will incorporate these levels to, in their own strategy if they're looking to, let's say, short or buy the euro. One of the things that when we did the analysis to start the week, I do the basic technical analysis as it starts the week, and we had come in with the euro. And right when we came in the euro, we were already in that area that we were looking to go on and buy. You can see here the euro already dipped back, but we had mentioned support is 13.26 followed by 12.94. Well, we were right there trading at the 13.26, and you can see that key level coming across here on the daily. Now, what I do is I also incorporate the 2-hour charts for the levels to come in. We actually had even right here at 13.24. And then for my own intraday trading, I'll look at the 30-minute. I'd already spun out of the euro. I mentioned that in the chat room. But I did want to mention a couple of things. Blake was mentioning about the things we do in the room, but Blake and Dale were talking about, and Stelios about the S&Ps. Look, here's the deal. At least here's my take: is Trump didn't get anything out of the G20. Okay, if you're wondering about the S&Ps, because this has been my take, and look, I've been a bear for the dollar for about the last almost 3 weeks. And we're going to go and take a look at the dollar. I've mentioned it multiple times, and nothing's changing. And here's the reason that I'm so bearish to dollar, and I've been talking about it. People keep saying the data is okay. The data is not okay. The reason why I was so bearish to dollar is because the data has been weak, and the thought that the Fed will be cutting rates. If the Fed's going to be cutting rates, do not short the S&Ps. That's it. Because the thinking is when the Fed cuts, that's not going to be one and done. Whether it's 25 basis points or 50 basis points, it's going to go through a cycle. Now, whether it's a course of 50 basis points in total or 75 basis points in total, they're going to go in and cut, and you don't sell equities. That's why the equities are holding up, not because of anything Trump did, and I have to disagree with Dale. It had nothing to do with the deal with North Korea. Matter of fact, Trump wouldn't even have met with North Korea had he got something, because he wouldn't do anything that would have taken away from his success if something had been gathered or garnered at the G20. So the idea that nothing has been achieved other than a delay of further tariffs, that strengthens the hand of continued weak data, which is what we've been seeing here, resulting in this move here in the cash dollar index, and why I expect the dollar to continue to go in and further weaken. Matter of fact, the data has been poor all along. With been manufacturing data, the worst manufacturing data since 2008. Y'all mentioned the index is the Empire Index, the biggest fall on record. We just had that last week. So my point is that the Fed is going to cut, and they've already said that they're going to focus more on the upcoming data. So the data that's coming up is going to foster. Let me get pulled up the wrong one here. The data that's coming up is actually going to go on and have a greater emphasis. So as Blake had mentioned, traders being away, the weaker this data keeps coming in, it's going to strengthen the Fed's hand for potentially, although they're not looking for that, a 50 basis point cut. So in that situation, you don't even want to even think about selling the equities. I think they are overdone. It doesn't have anything to do with what happened in G20, but it does strengthen the hand on us. If you spin it around, is because nothing's going to happen. Even if they did go on and reach some kind of an agreement, that probably would have solidified the Fed only raising or only cutting 25 basis points. But the thought that all we're doing is delaying, it doesn't stop the data from continuing to come in. It's not going to change on a dime. So if this data continues to worsen, and Stelios pointed out, and so did Blake, how this data now is just garnering more steam as we go weaker and weaker and weaker, is going to only strengthen the resolve and potentially a 50 basis point cut. And in that scenario, you're not going to want to go in and fight the moves in the S&Ps. So I just wanted to go and touch on that. As far as what we're looking for, one of the things I was looking for was the spot gold to get down to 1390. Been looking for that since last week. Been talking about that. We did make it down there. I'm long gold from down here, but looking across the board here for the euro, we've had the euro going and pop up, and I just wanted to give my 2 cents on that, where I thought that potentially we may go there in regards to that. But getting back to the euro, we did go on and fall into that 1326. I think we will continue to move higher, and once again, it's not so much about the euro. Basically, it's a de facto opposite trade of the dollar index. So for those that think that it's in such poor shape, the euro comprises 56.4% of the dollar index. So basically, one's trading against the other somewhat. So if you expect the dollar to go on and continue to fall, which I do, then that's going to eventually just go on and push the euro higher. Looking across the dollar yen, we were actually, when we came into the week, we did the basic technical analysis for the traders here with ForexAnalytix. I do that on the weekend before we go and open up. And you can see here we had our resistance coming in. We're looking for resistance coming in at 858. You can see that. The high that we came in today was 855 or 854.7. But we do our analysis that we make available to the members of ForexAnalytix on the platform that comes. You can see right here with the different. One would say the strategies or disciplines, I should say, whether it be macro, candlestick, technical, harmonics, Elliott waves. What I do is I go on and come in with the Asian updates for basic technical ahead of the week, breaks up, upgrading those during the week, and then we have our European crossover webinar that we do for not only the majors. Now I only have a couple of minutes. I don't want to run into Adam Button's time, but we go in and set those up for each day. We come in each day with our levels where we're looking for the market to potentially go to, and then we go on and chart those out and in the bias chart with also a bias as to what the market is potentially doing. We can go on and take a quick look into the cross rates. Let me go on and move that screen here. And we're looking here with the cross rates. And Blake had mentioned here with the Aussie yen here. And we did see a pretty nice jump here in the Aussie yen. We actually came into, pull it up here on the daily moment. And you can see that we've made this run up here. We're pretty close to the 38%, and really the market did pretty well. It actually had a pretty nice run coming off of this key level here. This is actually a level that we've been looking for the market to eventually get to. I think when we tagged it, we were talking about it being a death march all the way down to 74.2. I remember that being like a 61% down here. The market wasn't even looking for it. It just wanted to keep on pushing until we got there, and we had a very nice rebound. Whether or not we go on and get some sympathy move as far as equities, and Blake had mentioned that, potentially, quite often a lot of people will go on and trade the Aussie yen as a proxy, for equities, and potentially we can go and see that if the Fed goes and cuts, depending on how much they're going to go in and cut. And that's why I did take a little bit of time. I thought it was important to point out why I think the equities, and I don't even trade the equities, but like I said, I would not be fighting that move, and I don't think it is so much about they believe that there was a ceasefire on the sanctions or further tariffs. Look, it has to do, like I said, that I believe now the equities know that the rates will be cut. It's a matter between 25 or 50 basis points in July, and as the worse that the data gets coming in is going to weigh on the cash dollar index, because the thought will be that you'll be looking at several rate cuts. And I'll leave it with one thing before I go and get off, is a lot of people compared this environment to the rate cut that took place in 2001. in the first week of January. That ultimately ended up, I think ended up being 125 basis points. I don't remember, but they got one in January. They thought it might be one and done. They got another one again. Preceding that cut by, and it was the same environment as the way the equities were. Preceding that cut, the cash dollar index fell 1,000 ticks, not 100 ticks, 1,000 ticks. It went from 118 to 108. Now, I don't expect anything like that, but I do expect the dollar to go on and succumb to this move, because one of the reasons dollars have done so well is because the data has been so much stronger. We've had a diverging Fed, and now the Fed's going to be going back the other way. I don't want to go on and spend more time.
I was going to say thank you, Paul. That was an awesome recap. And I remember, if you guys want to listen to Paul Franco,
Neil's asking how.
You have to be a ForexAnalytix subscriber, and then when you do that, you get emails sent on his European crossover, which is exclusive to the the ForexAnalytix community. So you have to be a member here. But now also keep in mind that that Paul also does an end of session wrap that is open to the public. Correct, Paul?
Yes, it is. Yes.
Okay, and so thanks for coming in for a few minutes today, Paul. And it's always nice to hear you. You know, Paul Franco and I have worked together for, and he's SPZ Trader. If you don't know him on Twitter, we've worked together for several years. He came over from my old company where we were both at to join us. So it's always great to have you here, Paul. We got.
I did want to mention one other thing is that I didn't know that you were going to be out this week or a good portion of the week. So I'm here to go in and cover for any time during the webinar, either early or late, because I know that we'll be running a little bit of short staff this week. So
awesome. Well, you know what? We'll get in touch a little bit later today because we might have some coverage that may be needed. But I'll chat with you a little bit later.
Okay,
today.
Sounds good.
Thanks, Paul.
Thanks, Paul. You know, Blake said you're a bulldog. And that's,
yes. Paul
so
Franco
that's your
is a
animal
bulldog.
spirit.
Yes, he is. Hey, real quick, Andel asked thoughts on the Aussie New Zealand. Look, we have the RBA coming up tonight, and you know I wouldn't be surprised because everybody's expecting them to cut rates. So I wouldn't be surprised if they're just not as dovish as the market has been pricing in. Now, the Aussie New Zealand was the pair in question. I've been watching this down channel for a while, and we're at the 618, which is 104.50. I've been considering buying it here at 104.50 since last week. I have not been long. I was hoping we'd get towards this channel bottom. But I think you've got to keep an eye on it. As long as we trade above 104, I think the risk of a move back up to 106 or 105.50 is there. I think if we get back above 105, that kind of would signal to me that we might have found a near-term bottom. We might have like this big, this might be an actual big inverted head and shoulder pattern developing. But at any rate, while we're below 105, I'm a little skeptical about being long. But if we get back above 105, and tonight the Aussie rallies following the RBA, remember that happened with the New Zealand dollar just 2 weeks ago. So just the market didn't see the RBA or the RBNZ as dovish as they had thought. We might get the same type of outcome tonight. I'm not expecting it, but watch price action. I think above 105 could be a little bullish for the Aussie New Zealand. Anyway, I want to make sure that I pass it over to you, Dale, with Adam Budden. He's always a pleasure to have here. One of the most respected Forex sites I think around in this industry is Forex Live. I think they do a great job at keeping the market, keeping traders up to date with current events and what's happening in the FX space. So I'll shut up now and let you bring in Adam.
Thank you, Blake. Okay, Adam, I just promoted you. Not that you need a promotion. Let me unmute you.
Hi there, Dale.
Hi, Adam. How are you?
I'm doing very well.
All right. So, if you hover your mouse around those controls, okay, here we go. So we could see your charts.
You can see my charts? You got
can't.
site of Forex Live? Can't.
Yeah, can't. So you go to share,
Okay. Share.
just scroll your mouse and you'll see the controls.
Ah.
And it'll be a green box to say share.
Gotcha. Coming up. Let's get this one up here. How's that?
Happy Canada Day, Adam.
Well, yeah, exactly. I even had, I guess we don't have video in this anymore. I got my Canada shirt on here and everything, so I'm pretty excited.
Oh, you could use your webcam. There's a webcam option if you'd like. That'd
Well,
be
I'll try to start it. I don't think we need to see me anyway. It says you cannot start your video because your host has stopped it. But that's all right.
Oh, okay.
Or it must be in the settings.
I can, huh?
It must be in somewhere in the settings. But that's
All
all right. Yeah, everybody. We can look at the Canadian dollar. We can
Yeah, what I'd like to do is, I really love your seasonals, and here it is July 1st, but maybe you could give me a history lesson first, Adam. What does Canada Day celebrate? Canada's independence?
It's Canada's independence, 152 years today, 1867, from the UK, and it was a pretty peaceful. It was just one of those British ones where they walked away, I guess.
Okay, well, yeah, instead of what America went through. Interesting that they both happen in July, though, don't you think?
Yeah, I guess I can't give you
I guess
much more
they
of a
feel
history lesson.
it's a time to separate. So maybe Brexit will happen in July. No, I'm kidding. Anyway, so seasonally, what do you have shaping up for July, buddy?
Well, it is a big month for Canadian dollar. All the
Okay.
commodity currencies. And, I did a recap on our site on of the June seasonals. I don't know if we talked about that, but it was that was a U.S. dollar weakness month, and the dollar ended up being the weakest currency. Especially dollar Swiss was one that we highlighted, and that ended up being a good one. The Canadian dollar was the top performer last month, and the seasonals for Canadian dollar, Aussie dollar, Kiwi dollar, it's the second strongest month over the last 10 years seasonally. So, I mean, they've got a bit of momentum. I mean, the fundamental picture doesn't exactly scream to buy any of those if the Fed hits the brakes here, but
Okay.
it's a good
Interesting
month for,
segue. All right, so
I
Fed's,
mean, there are more seasonals. We stay on the seasonals for a sec if you want me to
sure.
wrap it up.
Well,
But for dollar yen, it's the weakest month on the calendar. So again, that is it's a tough one to square with what's happening right now. And generally the US dollar, it's a soft month, second softest month on the calendar if you go for the Dixie or the Bloomberg dollar index. So a lot of reasons, one big reason anyway, not to like the dollar. And it's the best month for the S&P 500, July, and also the UK FTSE 100. So some good news for stocks there, but again, if you want to get into the Fed here, that's kind of what's on my mind.
because you brought it up, and I'm fascinated. Not only because you brought it up. So, Paul did mention that part of the uncertainty that could create them to move and lower rates was trade uncertainty. So right now the S&Ps are celebrating a truce. And is it possible that Powell also interprets this truce as not a reason for them to ease? The market is looking at, for sure, I mean, almost like it's a layup lock that they're going to lower rates. You think there's a possibility people are wrong-footed on this, Adam?
Yeah, well, I mean, it's nuts to me right now. I mean, I just pulled up the probabilities on the screen there, and it's a little hard to read, but
We can see them.
20%, 50 basis points is still in the market. I mean, that's nuts to me, given that we just had this truce. A cut I think is coming. They can't back away from it now.
But you're going to do it at all-time highs in the S&Ps? Why use your ammo here?
I think it's because they've committed to it at this point. But I think we focus probably a bit too much on that one move. And what really matters is over the next year, we have 4 cuts priced in. And it might just be one. This might be one and done. They might start to reframe it, I think, as an insurance cut. And we heard that from Bullard last week. And I think that's the risk. I think we have Williams tomorrow and Mester. And we start to hear this insurance cut talk. Well, that's, you still have the optionality later. But if you're pricing in 4 cuts or 3 before year end, the market starts to have second thoughts about that. and then
Great
the dollar
point.
can be higher. At the same time, we've got data. I mean, data hasn't been great. Today, in 50 minutes, it's the ISM manufacturing number, and I'm expecting something pretty poor on that.
Okay, so does that take you to, do you think we put in a major top in the dollar, Adam, and we're on the verge of breaking down? Is that your bias, or do you think the bull market in the dollar, as long as we hold some levels, say 95 in Dixie, there's still a chance for a new high in the dollar this summer or fall?
Yeah, I think, I think we have probably hit the high, but I think it's going to be a long turn, not a short turn. The U.S. economy might be slowing down. I think there are some signs that it's softening a little bit. I mean, dollar is a very crowded trade, but I don't think it's going to be that kind of V-shaped top. I think right now we'll probably see some dollar strength over the next month, or the month or 2 months, as we get some mixed data. Maybe the Fed backs away from something so aggressive, stocks come off, it just fills it out here a little bit at the top, and then we turn towards Q4 of next year is probably the time when the dollar goes. Just given, it can all blow up on one Trump tweet, but I think there is going to be some negotiation. However, the one spot I think people aren't watching is Europe. And I believe the plan all along was for Trump to make a deal with China and then pivot to Europe. And I think even in this coming week, we might see Trump kind of shelve China for a little bit and turn and try to get a quick win with Europe on trade, or try to squeeze Europe. And that, again, can really undo all the good news on a lot of fronts.
You mean starting with autos again?
Autos, exactly. Absolutely.
Okay.
Bring the hammer down on autos, Trump talks about agriculture as well.
Yes.
Along with,
Yeah. There are a lot of the grain people in this country are under pressure. Let me ask you about this spectacular move we had in the gold market, Adam. And
let's pull it up.
Huh?
Yeah, pull up the chart here.
Okay.
Great.
So we had what people are calling like a 6-year breakout of a range. Depends where you draw it, 1365, 1375. But you have a lot of people talking much higher numbers. Maybe if your seasonals are right about the yen weakening, we could get a continuation move and buy breaks here around 1380 or so, looking for higher numbers.
Yeah, I think that's, to me, if you like the technicals, it's a huge consolidation. It's a breakout. Maybe you get that retest at 1350, 1375. And we did get 1381 today, so if you're really bullish, maybe you take that as the sign. I'm going to wait and see what the Fed says. I like it. I like it a lot. I like the gold trade. The last easing cycle globally ended in $1,900 gold.
Okay, 2011.
Just a shade. That was kind of the peak of the last easing cycle, right?
Right.
And if we're in another global easing cycle, we're going back there. As far as I'm concerned, this is, to me, in the big picture, I think what you've seen now is Fed rates aren't going to get above 2.5%, like ever. This is, we're cutting at all-time highs in the stock market. Demographics aren't getting any better in the United States, and inflation, isn't materializing. So if you cut now, you're, at best you get back to these levels in 10 years. So gold just looks better and better in a zero yield world. Seasonally, though, there's a little bit of strength in July, just over the last bit. In August, though, is a much better month. So maybe it sets up that way. But you still have a bit of a positive backdrop here for gold. Although June was an amazing month for gold, and seasonally not particularly notable.
So let's swing over to poor man's gold. Silver way out underperformed. The gold on the upside didn't even take out the high of the move from a month ago on this recent rally in gold. I've noticed, though, the last couple of days with gold selling off, silver acting better. You track the gold-silver ratio, it's trading above 90. And any view on whether silver may begin to hold up better? And I've been saying to people, why not exchange some of your physical gold with the gold-silver ratio at 90 for some silver, not all at once, or do that, because I think it's possible we look back at these 90s in gold-silver ratio and go, why weren't we doing that? Because, you know, the mean is 40 or 50.
Yeah.
What do you think?
I mean, I see. It looks like it's basing out here, and I think if gold gets that real enthusiasm, I think in order to get a big move in silver, you have to have that old time enthusiasm back for gold, like we saw, you know, 8 or 10 years ago.
Okay.
When gold was on the tip of everyone's tongue. You know, I talked to the gold guys. You know, we're obviously not there yet. You see the miners. You see, maybe you start to see miners consolidate. You start to see gold run up over 1,500. I think that's when silver gets into it. For me, I'm more of a keep it simple guy. If you like metals, go with gold and don't overcomplicate it, because I think that's a bit of the danger for a lot of traders. For me, is I like gold, but silver's a bit cheaper, and wade into that. I get what you're saying, and it certainly realize it looks like it.
I get what you're saying, and I recommend people listen to what you're saying, because it's tough enough, isn't it, Adam, to just be right about a complex instead of, you don't have to be right about everything within the complex.
And it's,
find the leader and stick with it.
How many times have I done that, or you done that, or any trader I know has?
I need a calculator.
A great idea, and then overcomplicated it and screwed it up somehow.
Yeah.
So, you know, it's the simple ideas, the simple themes. We're in a global easing cycle, buy gold. And silver will benefit too. You know, bonds obviously benefiting. They're way out ahead of it. But now is probably the time to wait and see. I mean, Powell speaks on the 12th or the 10th of this month, and that's probably the time I'm going to watch. And if he stays as dovish as he's been, then just pile right back into gold. But until then, let's see what happens at 1350, because we might get back down there.
Okay, oil not as straightforward, is it? You know, you have extremes on both sides. Iran percolating, any problem in the Strait of Hormuz, you know, who knows? And a lot of bears, because of the narrative of weaker global growth and things that you pointed to, think we can actually take out the January low in crude. Where do you come down here? Do you think it's ripe for at least a pullback with the bullish OPEC news today?
I mean, the OPEC news is good if they extend it to 9 months, and you know, Iran stays on board, Russia's on board. There's this big confusion about U.S. production supply, right? These inventory numbers have been so huge, and they're finally starting to turn. And you know, if you get some dollar weakness, a little bit better global growth, then I do still like the upside up into the 70s. But okay, you know, when I look at this chart on the weekly I have up here, monthly chart, weekly, and you see this consolidation starting to happen right around 57, right around these levels. Yeah, and I think the market you're trying to find out. Okay, we get a better idea here on supply, but the demand side, it's really up in the air. You know, the numbers haven't been great on the economy. If that's slowing, you know, even if the Fed cuts, but if it just ends up being a couple Fed cuts and the rest of the economy does well, you know, oil can pop and bust out into the 80s. And for me right now, all right, let's just wait and see a little bit on oil. I am at my core a little bit more bullish on oil, but you know, now's not the time, especially after the pop in the last 3-4 days. Yeah,
the bears would say this is just a retrace move from the high of 66.50 to the low of 50, and the bulls would say that low at 50 is just the beginning of a 3 or a C to the upside to take out the highs. So, yeah, it's right in the middle, neutral, maybe volatility spreads here. So I also want to move over to what's been happening in U.S. dollar yen. You talk about the seasonals on it, a technical picture on it with what it's done in, say, the last week or so to recover here. This a rally to sell based upon your seasonals, and what levels look like?
Well, you're talking about seasonals. It, like I said earlier, it's the weakest month on the calendar for dollar yen.
Yeah.
You know, this chart is weak. I mean, it's bad. You have just a series of lower lows all over the last month. Bounced here, but not off great support. That flash crash low looms wherever you want to peg it at.
I was going to bring that up. You think we might go for that?
You see all these yen crosses are flashing the same kind of sign. The one really interesting one I'm watching today is Kiwi yen, because it looks like you popped a little bit above this kind of recent high here, but now it's kind of hanging here and it's not looking too strong today. Stocks open in 10 minutes. Maybe we get this sell the fat kind of move. And then I think something like Kiwi yen looks really bad because you have that old low again. You're even closer to that there. You really have to go down and touch this. So, I'm having a hard time right now squaring this, this fundamental improvement on trade, probable less dovishness from the Fed, or shift to something more neutral from the Fed with a lot of these charts. And I'm just not the kind of guy that will fight a chart. So,
okay.
I
do nothing or look for rallies to sell?
Yeah, wait for a little bit of clarity on some. I mean, ultimately, it could be that the Fed just stays dovish, and then you sell dollar yen, and it's fair as straightforward as the chart looks, because that certainly looks like a bit of a dead cat bounce to me. But if you get up over 108.80, I mean, you're here at 108.30, right? There's a bit of resistance at 108.80, 190, 109.20 in there. So you sell it here, 50 pip stop. I mean, that's a good trade for me. I just like to, I think this ISM number is going to be big. If this is poor, you're in recessionary territory on manufacturing. I know it's not a huge part of the economy, but it's forward looking. It's pretty worrisome if that's below 50. I think the market's right around 50. The expectation is 51, but I think the market was spooked by Chicago PMI was really weak on Friday. So.
I know that crypto hasn't been around that long. Probably there aren't seasonals.
Well, I've got the seasonals on crypto.
They're okay, buddy.
Just Bitcoin.
You're the best. Yeah. So anyway, we had this tremendous rally, and I actually saw the higher low in February and rode it for a while. But this rally exceeded my expectations. I guess the question is this a bear market rally from last year's high of 18 grand on Bitcoin, or is this a resumption of a bull market, bro?
Yeah, I mean, it did top out just above the 61.8% retracement of the all-time high to the December move. So you have a good argument there for saying, all right, this is just a retracement. We're kind of down back here again after the weekend. I've got the chart here. Let me just pull it over. In the meantime, there's the seasonals. I mean, I think it's nuts to trade that on seasonals, but I have it, and there it is. I don't know if I need to zoom that in a little bit.
Is August a negative month? I
think August, I mean, I don't even have those averages there, but I just eyeballing July. It's been pretty good. Even last year it was up 30% in July. But June. The reason I bring up August, and you may want to pay attention to it, I interviewed a crypto guy, and he said that August is ghost month for the Asians. And they're, allow the money flow into crypto, and that they pull their horns in a little bit during August. So just curious if you had anything for August. Well, that is August there. I mean, it shows last year was a little soft, but 2017, right? And that was when the mania really clicked in the peak of the Bitcoin market. It was kind of soft through the summer, and then it was around mid-late August that it really went bananas, and that's when that parabolic move started up, through that year end. If you look at that August 2017, 64%, and then a little dip in September, and then 3 insane months to get to that all-time high. But I guess if you exclude that, you see, 16, 15, 14, there is a bit of weakness there. And, I find it hard to draw any kind of conclusions on that. There's the chart of sorry for the poor charts, gang.
They're not
have a
poor.
big number, right? But that's you see that 61.8% retracement. Yeah. Got above that for a few hours and 2 different days last week. But that is and that's the whole move, right? From high to low. Like I like the kind of look of that. Sorry, it cuts off on the edge there, but that's kind of the way I'm thinking about Bitcoin right now. But it's it's amazing. I mean, it's just unbelievable what's happened in Bitcoin in the last 2 weeks.
Yeah, maybe the atmosphere has changed. People are looking at it, taking it more seriously. Maybe a lot of crypto people say we're entering the mass adoption curve.
Well, it's interesting to me because if you look at the trading flows, it's all been kind of money from Tether, right? So I saw these flows kind of last week, and you see it was like a $5 billion inflow into Bitcoin, and 4 of it came from Tether. So that tells me that it's crypto people kind of getting back into Bitcoin, right?
Okay.
But if you were to have that public start to come back in and new money come in, that's what you need. And you need to kind of, I like the people who watch like Bitcoin searches on Google. You start to hear that buzz. If you still start to hear the talk on the street again about Bitcoin, and then, then I think it gets back to those all-time highs. But I don't quite sense that yet. I don't know. What's your sense, Dale?
I don't do as much. I don't know where that street is unless it's Internet Avenue. To hear what's happening on the street, but right now it's an IDK for me. I love to buy a retracement of this move. I can't chase it, and I want to wrap it with S&P's making new record highs today on the truce. You have any seasonals there, and your view, a continuation of this bull market, or do you see any trouble ahead?
Boy, it's tough to hate this chart right now.
Yeah.
I mean, I'm scared of the Fed. You probably can't fight an all-time high. And that's, what are we, 4 minutes from the open here? I don't have the futures up, but there's a spot that kind of looks like a big inverted head and shoulders in the last year or so. And if so, I mean, you're going to 3,600. When do I have the right chart? Yeah.
Yeah, either that or a megaphone.
Yeah. I mean, you get this kind of topping, and you get a little bit of a
broadening
out here.
Broadening formations are the toughest to trade. I've read in all the textbooks.
And back, but I can't. I mean, what if the Fed just keeps cutting? They just say, all right, it's all about inflation. You know what? Growth is good, but we don't see inflation, and we're worried about lower inflation expectations. I mean, that's a reasonable bet, and that's how you get to 3,600. And the chart looks set up for it.
Okay. Tough to get long and tough to get short. Another.
I mean, that's how it always is, right?
Well, I don't know. There are some times where it's easier to get short, with failing rallies or a pullback, putting in a higher low. I mean, you have reference points, but you're right. At new all-time highs and lows, very difficult trade to take.
I mean, the problem, and the one thing that people have been saying for the last month is this is a hated rally, right? People have been saying that people hate it. Money has been flowing out rather than flowing in of funds. The public's very skeptical. I'm very skeptical. There's nobody banging the table saying buy the S&P 500. That's when it usually rallies. So. There's no, if bonds stay where they are, you can't buy bonds. So, it all sets up pretty well for stocks. And it really hangs on the Fed here now. But what do we know about the Fed? They've been dovish. They'll probably stay dovish. They're probably not going to pivot back to being.
Well, yeah, Paul doesn't want to be demoted by not being dovish, right? Although he says he will serve out his term. As chairman. So anyway, that's, sometimes, Adam, you know what? I feel like Rod Serling could not have written the script that we're living through today.
If you want to be dollar, it is a crazy world, but you can set it up pretty well for dollar weakness and, stock market strength, gold strength. I mean, the charts are all saying the same thing. The Fed has rolled over here, so I think you probably just want to bet on that and go with the seasonals. And
the dollar is the most convenient sacrificial lamb, don't you think, for keeping the party going?
It is. There's not a lot of downside in it. There really isn't the inflation that the Fed was worried about. And say they run it at 2.5% on inflation instead of 1.5%. It's not a big deal. I think the economy can handle it. The market can handle it. And Trump certainly helped him, keep the peace. at the Fed to keep him happy.
Yeah. And you know what else? After talking to you, Adam, every time I do, you make it easier for us to handle a difficult task in, you know, uncertain times, trying to pull a piece of the market out here and there in many instruments. And so, again, Adam, I'm very appreciative of you coming in and edifying our community. If you want to show your great website and, you know, what people could do to get involved with you guys over at Forex Live, this would be a good time.
Yeah, right.
There it is.
Yeah, well, here I got it up on the screen. It's Forex.
Look at that content. It's everywhere.
.com. It's, you know, a live site thing. If you want to see, if you don't know Forex Live, if you see a move in the market, you want to know why the market moved, go to Forex Live. It's just live analysis of every tick, more or less, every headline. You know, we've got all the news services in the world, but most people don't. There's no cost to it. It's just advertising. And
That's your model. Your model
good
is
content like this. You know, I've got the ISM number. Those are all the regional numbers, just breaking them down. You can see how poor they are ahead of ISM. We'll have live analysis of that as it comes out. And yeah, that's the name of the game at Forex Live, just real-time analysis of whatever's moving the market, and a little bit of fun. We try to keep it light, just like you, Dale. So it's long days in the FX market if you can't have a little bit of fun.
Yeah, I wish I was your age. Anyway, Adam, great talking to you, and what a great job you and Greg and your whole team do over there, and you're really providing a great service for free to the trading community. I salute you on that, and have a great Canada Day, my friend, and loony times to you and everyone else in the world. It was great talking to you, Adam.
Okay, great. Yeah, it looks like CAD's breaking down, so it's always a pleasure to talk to your community, and thanks so much for having me.
All right, Adam. Everyone, Adam Button, you could follow him at FX_Button at Forex Live, and go to his site and stay informed with all the breaking news and great commentary by Forex Live by Adam, Greg, and the rest of his team. Thank you, Adam, buddy.
Take care, Greg.
All right, bro. All right, that's a wrap for us, everyone. See everyone for Turnaround Tuesday. Have a great day. Remember, don't just count your pips, count your blessings. See everyone tomorrow.